Hello and welcome. In this briefing, we're going to unpack one of the most crucial global investment stories for 2026 and beyond, the AI-driven technology opportunity unfolding in Taiwan. All right, let's get right to the point. The central thesis is this. For any global equity investor, Taiwan's tech sector represents the most essential picks and shovels play on the entire AI supercycle. You get fundamentally better growth, and you get it at a far more reasonable price than its American counterparts. So here's how we'll break this down today. First, we'll dig into that picks and shovels strategy. Then, we'll anchor our analysis in the market power of TSMC. From there, we're going to quantify the valuation gap, confront the risks head-on, and finally, frame the long-term opportunity. You see, as the AI market starts to mature, the sophisticated money is beginning to rotate. The focus is shifting, moving beyond the big, well-known US names like Microsoft and Google and toward the companies that are actually building the core infrastructure.
And this all comes down to the classic picks and shovels strategy. Think about it. During a gold rush, the most reliable fortunes weren't made by the miners hoping to strike it rich. No, they were made by the folks selling the essential gear, the picks, the shovels, the support systems. Well, in today's AI supercycle, Taiwan is the one manufacturing those essential tools.
And look, this isn't just some clever theory. The data is already proving it out. In the fourth quarter of 2025, Taiwan's core enablers, everyone from foundries like TSMC to assemblers like Hon Hai, they all significantly outperformed the US Nasdaq 100. The market is already rewarding these critical players.
Now, if we look to the future, the opportunity gets even bigger. The next major hardware cycle is all about moving AI from the cloud to the edge, to our local devices. This demands custom-built chips, or ASICs, and that's a game where Taiwan's deeply integrated supply chain gives it an advantage that's, almost impossible to beat. Okay, so let's zoom in on the absolute anchor of this entire ecosystem, TSMC. It is, and this is no exaggeration, the very bedrock of the global tech economy, and it's the #1 beneficiary of that shift to custom silicon. Just look at this number. It really says it all. In the fourth quarter of 2025, TSMC posted a truly stunning gross margin of 62.3%. This is the clearest, most direct evidence you can get of its incredible pricing power and its absolute dominance in the market.
And you might be thinking, is this just a one-off? Well, according to Goldman Sachs, no. They see a gross margin level above 60% as, and I'm quoting here, a new norm. This is sustained structural profitability, and it's being driven by an AI-fueled supply and demand imbalance that's probably going to stick around through 2027.
So that's the quality, that's the growth, but the big question for any investor is, what's the price you have to pay for it? Let's do a direct head-to-head comparison with the US market. And this is where the difference becomes just crystal clear. The Taiwan 50 index is projected to grow earnings at over 22%. That's nearly double the S&P 500. And yet, it trades at a lower forward PE multiple. And on top of all that, it offers a dividend yield of 2.1%, again, almost double its US counterpart. Now, this all comes together in the key value metric, the PEG ratio, which is sitting at just 0.9. To put it simply, you are paying less than half for each unit of earnings growth compared to what you'd pay in the S&P 500. By the way, if you're finding this global equity deep dive helpful, go ahead and subscribe and hit the bell for more institutional-grade analysis like this.
All right, but of course, no credible analysis is complete without taking a hard look at the risks. So let's pivot and talk about the near-term volatility that investors absolutely have to navigate. And the main concern, as this survey from the American Chamber of Commerce makes pretty clear, is geopolitical. National security and cross-strait relations are at the top of the list for businesses operating in Taiwan. This is the risk that dominates the headlines.
So how does this actually show up? Well, you've got the restart of large-scale Chinese military air activities. You have the systemic risk of the entire US tech sector being so heavily dependent on just one company, TSMC. And finally, there's the industry concentration risk, relying so heavily on the AI boom itself to continue. But this is where things get really interesting. How do we square these very real risks with the long-term opportunity? Well, this is where sophisticated investors are seeing what we might call a resilience dividend.
So it begs the really critical question. If these risks are so obvious, so visible, why are the world's smartest companies not just staying, but actively doubling down on their investments in Taiwan?
And the answer is right here, in one incredible number. A full 92% of American Chamber of Commerce member companies are planning to either maintain or actually increase their level of investment in Taiwan through 2026.
And this chart really shows you what that commitment looks like. We're not just talking about sentiment here. We're talking about planned, long-term capital allocation by companies who are on the ground. They are literally voting with their wallets.
So why are they doing this? Well, this quote from the AmCham chairperson explains it perfectly. He says the risks have been priced in. Companies have built solid business continuity plans, they've essentially inoculated their operations, and are now focused on capturing the very clear upside.
So when you strip it all back, the long-term opportunity is built on a bedrock of tangible fundamentals. The 2025 rally, that was driven by a 15.6% surge in real sales, not by speculation. You've got 82% of businesses who are confident in the economic outlook, and Taiwan's high dividend culture offers a unique, stable diversifier for any global portfolio.
So we'll leave you with this final thought to consider. As the AI revolution enters its next phase, moving from abstract models to tangible, real-world applications in our devices and in our industries, the question for investors is this: is Taiwan's indispensable picks and shovels ecosystem the most durable and ultimately the most valuable path to creating long-term wealth? For more institutional-grade analysis, make sure you're subscribed.